Hey traders, Stephen Kwitzel here with thetradersplan.com. It is, I'm shooting this after the close on Thursday, June the 2nd. I'll send this out Friday morning. So what we're going to do is we're going to look at the overall market, and then we're going to look at the top ETFs of the week. So let's start with the S&P 500. Today was a really, really nice bull day. I talked the last couple of days or earlier in the week that, we got the surge above the 20-day moving average, which is the pink line. And then we get a test, which we got a test on Wednesday, and it looked like it could have failed today, and then just support came into the market. In addition, the 8-day moving average moved above the 20-day, so I think that's a positive sign. This is also a great opportunity to put, to enter and put a stop loss really below Thursday or Wednesday's low, right? Whichever one is lower. I think Wednesday's just a little bit lower. And hopefully we can get a rally. Now, there's a lot of overhead resistance. There's the 50-day moving average, which is only a few percentages away. And then you have this kind of a lot of support around here, which could turn into resistance. But, I'm just going to really ride it as long as I can, because maybe we do get out of here. I'm looking to potentially ride the 20-day moving average. But we'll just kind of have to wait and see and take that day by day. And obviously, if you wake up Friday morning and the market's getting hit and, if it rolls back over, then I would definitely take defensive measures. But, tech stocks, we're definitely leading, and that's really what I want to see because they've been so beaten down. The NASDAQ has been so beaten down. So you really have right here, you can see right here, tech stocks were leading on Thursday, up over 2%. Semiconductors were up a lot. So I'd say right now, the glass looks half full for we'll call it a bear market rally, counter trend rally. Really until we get above these pivots right here of around 14.6, 14.5, or back above the 200-day moving average. I'm going to assume everything is kind of a counter trend rally. But I'll still push my chips in the middle and take advantage of that as much as it allows me to, right? Take what the market is really willing to give you. Now, if we look at the top, like I have it ranked by current week, and a lot of metals were really leading the way, at least on Thursday and on the week. Now, you have copper, you have silver that was surging on Thursday. This silver miners ETF was up over 7%. Copper miners, in my opinion, it looks a little better because you have this platinum right here that is still kind of in a longer downtrend. You have silver that is definitely in a longer downtrend, and then you have copper that I think is in at least in a consolidation, a sideways consolidation, where it found support around 24 and it's surging back. It surged back above the 50 day. It surged back above the 200-day. So, right now I'm really looking at this as, a potential entry with a stop really probably under the 20-day moving average, right? I wouldn't be surprised if this comes back and tests the 20-day and then kind of resumes its uptrend. A lot of times that's what these breakouts will do. They'll move above a long-term moving average and then they'll sell off and come right back down, but they'll find support at the moving average under it. So in that zone wouldn't be a bad risk reward, especially metals are moving today. There's a lot of, Chinese ETFs that are really popping, and one could argue they're opportunistic, but it is in a very long-term downtrend. I don't trust the Chinese markets. I'm not trading them. I'm just not. I don't, they've been going down for so long. Every trend reversal has failed, not to mention, China really doesn't care about individual stocks, and they've proven that. So I would prefer to put my money elsewhere. So right now I see an opportunistic in CPER. Actually, let's look at COPX. This one actually probably looks a little better, even though it's under the 50. Let's kind of go back and look at that one. They look pretty similar. So COPR, CPER, COPX. I wouldn't really play the other metals at the moment. Something. So what I'm really looking for is one ETF I've really been talking a lot about is solar. And even though this isn't a long-term downtrend, and you could say that is a very, very ugly trend, what I noticed was it started to bottom before the market bottomed. And before the market bottomed, it started bottoming and started going up. The 8-day moved above the 20-day about a week ago, and now it's back above the 50-day. So that relative strength line is rising. It's back above the 50-day moving average. I've been recommending this to my customers a while back, probably over a week ago, but this is still not a bad entry. You're just kind of getting a wider stop. You could put a stop loss, around the 67 area. Maybe it pulls back a few points, but I'm really surprised solar stocks have not outperformed more given the, high energy costs and the increase in investment that should be in solar. But, again, that's why we trade the charts. But this is something I would definitely put on your watch list because it bottomed before the market and it's been outperforming the market for about 4 weeks now. So I do like solar. I'm looking for those industries that are perking up that have been beaten up. And, the lithium battery, right, is now, this is an interesting looking chart. The last time it broke above the 50-day moving average, it failed, but now it's back. And this 70 area, if the market surges on Friday, this 70 area wouldn't be a bad place to put a stop loss. Like, see if it can get and break through 80. Could potentially hit some resistance in this zone, but I like this 50-day crossover right here around 70 as potential support. Now, all this is dependent on the market holding up, right? If we wake up Friday, the market rolls over, or if, whatever reason, all bets are off. You have to understand that with some of these more aggressive ETFs. We just want to really watch out. But when the market is showing signs that it wants to rally, I'd rather be in some more aggressive stuff so I can, hit profit targets much quicker in case the market rolls back over. I'm sitting on a free trade. So this LIT is looking pretty interesting along with solar and copper. And one other one is the semiconductors. And the semiconductors are up a lot on Thursday, up almost 4%. So that's always what I'm looking at. Like, okay, when the market's down, what's up? And when the market's up, what's up the most? And that's how you really find your leaders. So, we're kind of coming into this zone that could be potential resistance, but you also really have a mini head and shoulders, right? I kind of drew that, but you got the shoulder, the head, the neckline, and it's breaking through. I think this could, under a market rally, this could pretty easily get up to the 200-day moving average, which is about a 9% target in this zone. So to me, that looks pretty good, pretty strong. And if you're looking for something to try to slingshot, something that's beaten up, something to try to slingshot forward, that's not a bad idea. So you got semiconductors, copper, solar, and lithium are all looking pretty interesting. And that's not all, but like right now I'm looking for, okay, what's up the most? What can slingshot me forward, especially if money transitions to growth, even if it's in the short term, even if it's in a kind of a growth bear market rally. That's really where I want to be because I want to try to make as much money as possible in a bear market rally. Now, there's one thing I need you to keep in mind. The markets bottom way before the potential recession is here, or sometimes even before the recession or all the doom and gloom is over. So just keep that in mind. The market is always forward looking. And if it thinks the Fed could have a soft landing, or if just it's already priced in and now the valuations are becoming attractive, like those are all reasons where the market could rally. Do I think the market's gonna hit fresh highs and we're gonna go on to our new raging bull market? I think some things has to be worked out, but that's an opinion, right? That means nothing. You need to trade what's on the chart and what's on the chart in front of you, and don't get too emotional on what's going on. So I hope this was helpful. I hope you have a happy Friday and a happy weekend, and let me know if you have any questions.